Hey everyone, Gabe Galanti back at Rockline Wealth Management. Today we're going to talk a little bit further about one of the topics we covered in our last video, which was cash flow forecasting. Cash flow forecasting is one of the most common reasons why small businesses end up failing. So we really want to hit on this today. Some of the things that we have seen personally within Rockline, and then also some of the things that we've seen with our clients. Hope you find this helpful. The first thing we're going to cover here is accurate record keeping. Keeping one clean set of books, working with your accountant, working with your bookkeeper, gaining knowledge yourself, and fully understanding what are your expenses, what is your income, what are the different sources of these, and again, having it all directly outlined in an easy, accessible way. Next, super important, efficient invoicing. Getting those invoices out to your customers and your clients right away. Accounts receivable is a problem many businesses have. People feel very weird about hounding someone down for money, but ultimately, again, it's the livelihood that allows your business to run. Some tips here, you can use things such as a factoring company or an accounts receivable financing company, where essentially you are selling or trading your accounts receivables in exchange for cash flow up front at a small price. Another very important aspect of cash flow management is expense management. Understanding where your money's going. It's very easy when large sums of money are flowing in and out of a company to allow things to get lost. That reverts back to having that clearly outlined list of what your expenses are. You do not want to let that stuff get lost in the shuffle, because if, God forbid, you have a short month, those expenses might still occur and you might find yourself in a pretty weird predicament. Inventory management. Proper inventory management ensures that you do not have excess funds tied up in inventory that you do not need. We see this very frequently, where we will have clients that have warehouses full of excess inventory to the point that they don't even know what's there. Credit management. If your business allows credit to some of your customers or clients, really understanding the trustworthiness of that customer or client and what are the terms that you have laid out with them. Ensure that they are clearly outlined. Ensure that those terms are not broken. Cash flow forecasting tools. Another very, very important aspect. Some people like to use fancy software, which is phenomenal. Some people like to stick to spreadsheets. I personally use a 13-week cash flow tracker going out 13 weeks into the future, and I find it very, very effective. It's something that lives and breathes daily. I utilize it multiple times per day, and it has been instrumental in allowing us to grow while keeping track of what's going on within the business. Regular financial reviews. I personally conduct these at least once a month, usually the last Friday of every month. Some people like to conduct them more, but just taking inventory and stock in understanding what's going on in your business as a whole. Where are you at? Meeting with your accountant and your financial advisor and your bookkeeper on a regular basis. Quarterly is a great way to start. Again, so you can understand the ebbs and flows of money and understand the impact that your decisions have on the ebbs and flows. Building up a cash reserve, super important. Something that many people do not take into account, again, because there's so many moving parts going on. If you have a great relationship with a banker or a financial advisor or a CPA, accountant, they will probably recommend this to you. One of the most important things that we do is we have a dollar amount in our minds that we will not allow our accounts to go below. With that, we know that we can take a little bit more risk to the upside as far as spending a little more money on hiring or developing more marketing tools or going out and trying to acquire more clients. It is very important to have that safety net to give you the peace of mind when things get a little crazy. Supplier and customer relationships, something that we kind of hit on in the last video. If you can extend the amount of time that you have with your suppliers that you have to then pay them and shorten the time that your customers have to pay you, this is another way that you can absolutely optimize cash flow within your business. Diversifying revenue streams. Although some people might consider this a distraction, if there are other areas of the business in which you can venture and other maybe new products or services that you can offer that are tied into your core business, this can certainly help you over time. Debt management is super important. Understanding where you stand. Do you have lines of credit? Do you have an SBA loan? Are you personally guaranteeing any of these loans? What is going on? What are the terms? Are there any balloon payments at any point? Are there any amortization schedules associated with the loans that you need to be aware of? Understanding where you stand with your debt and how your debt can change over time is crucial. And lastly, government grants and incentives. Often overlooked, but super helpful. If you haven't, it is certainly worth taking a look to see if there's anything available on the local, the state, and the federal level as far as grants are concerned to help you further expand your business. That's all we have for today. Thank you for watching, and as always, I hope you found it helpful. We'll see you soon.